Okay, there we go. Audio's in. Okay. Everything's out the way. We can get started with what happened in the weekend, because a lot happened in the weekend. Nothing really happened Friday. Friday basically was no trade during New York. I mean, we didn't get really what we were looking for, which was the going higher, as we're looking for this to take out the liquidity here before going down. Didn't do that, just came in and consolidated. That's not something that we wanted, so it's not anything we could leverage. Then ended up doing that on the weekend. So if you were watching it on the weekend, you could have grabbed it, and even not even later, you could have grabbed it during New York. I mean, New York, Asia. Uh, London's closed for bank holiday. They're closed next week as well, Monday as well, because of King coronation, something like that. So it's gonna be, well, London was pretty quiet on this start of the week, and next week is gonna be similar. So Asia moved, London's not moving. We'll see if New York moves. Will probably not move as much as Asia, just from the gist of things and the fact that we're not getting too much in terms of news coming out uh, until the fateful Wednesday, which we have the interest rate decision and the Fed press conference. So I think a lot of people are just worrisome about that. So we're probably just going to get a lot of setup leading up to that big fateful day. But looking at how things are going, I don't think we go any lower in the next couple of days unless we're sort of building a very big short squeeze. Because we're already pretty decently heavy short. We got rid of all the liquidity that we wanted. I mean, we were heavy short on the prior days leading up to sort of the swipe, and that's the whole reason we were looking for a swipe in the first place, because we're decently short, and you could have easily said, oh, okay, yeah, we're really short, so we need something to sort of clear the liquidity, and clear the liquidity, grabbed a few people on the way, then instantly down they went, just liquidated all of them and let them go short on these lows. And now we're sort of stuck in the same area we were before, where we got a decent amount of shorts being stacked up, as you can see here. So if we clear those guys out, roughly they would be cleared out by here. So we'll give them some overhang, but after that we need them to sort of course correct, because if they do that, they're just getting rid of liquidity. Then if they get rid of liquidity, then there's no reason to continue going in the direction they were going, so they would reverse the trade and go the opposite way. If we go over and look at sort of ES and see how that's doing, you can see that, I mean, it did have similar sort of experience as everything else. I mean, you can see the leading last week essentially was trading down. They ended it on a very nice sort of close. They managed to close it green, and now we're looking at sort of fateful days to sort of push that down and sort of hit that into oblivion, I guess. Because we already opened the day up here, we're just collecting volume, and we could sort of assume that there are mostly sort of breakout volumes that didn't get achieved on the end of Friday, but ended up just getting hit here. If they end up being decently short, it will sort of push it higher, but we'll see the spread of things, because we're pretty much running out of liquidity for the high side. I mean, the only real untapped, there's not really too much untapped liquidity. I mean, you can say there's some liquidity maybe still trapped here, but I think by then, this point here, it's not really end of a quarter or a start of a quarter, so you wouldn't really call that for much about sort of short liquidity. No one really would put it here. Most of it would be achieved here. The only thing you can really catch out is breakout traders, so you're looking for points where they would go long. But looking at it on the sort of lower time frames, it is sort of heavier on the bottom, so you can say that there is some shorts getting stacked here. Not an awful lot, but decent amount. And we're looking for potentially them to sort of buy this. If they sort of buy this here as like they're buying the quote unquote retest, it will sort of very abysmally fall, but it just looks like they're sort of shorting it. So we might grab it up here, let them feign ignorance and buy here. Then if they can buy here and get trapped, then that can sort of maybe lead us down. And that's just going off the reading that these are shorts rather than being sort of longs that got squeezed in. And it makes sense for them to be sort of decently short, I guess, because they are coming on a swing low when after they achieve the high, so just adding 2 and 2 together. But the main thing we gotta know for sort of crypto is the fact that Bitcoin essentially after sort of pricing here and pricing up here for the remainder of last week, they sort of came back down a decent amount, but not entirely. You can see this range. They just came back to the top of that range. Now we're setting up a new range here for the Monday. And once we get that range coming in, it would sort of give us a tentative weekly range. Then we get the third Tuesday for the actual weekly range, and it's important to sort of say the Monday, Tuesday, even if it's not a trade day and a day that we get trades coming to us, it will be nice to just monitor them for setups. Generally, I think the first impulse is we squeeze it, just because everyone goes shorts here, and retail sort of come into the market. They see this, they're like, oh yeah, we short this. This goes all the way down to here because reasons. So if we're in fact looking for it to continue down, we are hoping for it to swipe up first to get rid of the people who went short here and who went short here. So looking to get rid of liquidity. Once we get rid of liquidity, then we can maybe hope to reach it down here, because by then the people who trade this here will say no, it's breakout now. It's breaking out back out. Then they'd say it goes up to here or goes up to here, whatever BS they get sold. I don't really care. Come on. But regardless of what BS they get sold, we're just looking for the first move out of this area to sort of tell us that, okay, they're just trying to get rid of one side to move in the opposite direction. In this case, if they move up, they get rid of shorts, so they move in the direction direction to where those shorts would have been profitable if they were still in the market. Because at this point, you're also looking for breakout buyers as well as the liquidations of these shorts. You can see that it's nice little volumes, a nice little shelf that they're closing here and letting the shorts get trapped on these wicks. So it's a very easy sort of to say that we're probably going to get this. Again, magnitude is up in the air, so don't really know if we're going to move super fast and loose today. And it just all would depend on what we end up getting on the open. See if we can carry that further, but I think from here a decent sort of day for a move, just not a very pivotal one where it's just a be all end all. You have to get into this trade today or you miss like an eternity of trade opportunities. It's never the case. But terms of if we sort of break lower, I mean, if we fall back into here, break lower, and just grab a bunch more shorts and just constantly build a short and try to squeeze, just looking to target here. But again, that's very sort of highly unlikely at this stage. Just looking at how everything has been built up. It's built with heavy split with where shorts get stacked below here, longs get stacked. There's a decent amount of long stacked here, so we don't want to go too high. We don't want to sort of deviate too far down. We're just trying to re-add as much as we possibly can before sort of culminating in a sort of downwards push, which is similar to where ES is trading. As you can see, we do have sort of longs and these tops being decently sort of split in volume, and you've got these bottoms where you've got a decent amount of shorts. So we're just looking to clear those out. Once we clear those out, then we can sort of maybe look for that down again. Similar to Bitcoin, this is just sort of instead of a bear flag, it's more bullish again. So we're looking to sort of trap breakout buyers. If we can trap breakout buyers here, then we can sort of push it down. So that's sort of the only sort of trade you're looking for bearish side is a clear sort of trap for breakout traders. Once we break the flag in the quote unquote correct direction, and we see the volume of traders coming in. And we see that volume on Bookmap being sort of bearish rather than them shorting that top. And again, I don't think they short it. They usually always break it out. Moving a bit ahead of time, you can see that where you have that, we have those longs, this slow deposit of longs. Zoom in further. Just coming in here, so you can see where we slowly building long here, and now here, but the bottoms are very heavy on the shorts, so more volume for short side get squeezed out. But again, we still have to be wary of how far they can move high, because the higher they move up, these start becoming break even. If they start selling break even, we don't really want to do that, because we might not get the volume back. But if we get the volume back, then they can break even, because the net amount of people getting trapped and the net amount of money being lost by retail is worth doing that. Then once we can get that, we can get them trapped in here again. Just get a bunch more longs, a bunch more sort of liquidations, and get rid of all the shorts as much as we possibly can. Then we can sort of make a beeline for a lower price. Again, similar spot, you can see a lot of panic selling occurred on these sort of ends here. So a lot of people just out of the market here, just slowly coming back in, getting comfortable here. So again, we're just watching these guys come in, and once these guys come in the droves, we can then sort of push it back down and make them feel a world of hurt. Similar to sort of the futures, we do have sort of bids around the 2800 mark, and just a bit higher as well, but most of it is concentrated around that 2800. So it makes sense that will be sort of where we're looking. Nice round figure if we're going short for today. Ultimately, if we end up getting a down day and Tuesday end up continue going down, I think we sort of push the envelope a bit on Wednesday, where we push up. Good morning, squeeze them shorts, squeeze them shorts. Yeah, man. That's always a nice day when we squeeze them shorts. Let's see what news we're getting after the embargo lift. Watch for Fed pause, a debt ceiling battle, and a volatile summer. Shelter in these stocks. Wait, let me quickly check gold on the open. Okay, everyone running into gold. That's always a fun day. It just shows the fear that looms on everyone's mind. As you can see, once people got comfortable and say, "Oh yeah, everything's gonna be fine and dandy," they sort of shorted that. Now everyone running into droves. I think we continue going back and running this a bit higher, just because if we're expecting everything to go down, probably have some breadth to go higher. Then I think Wednesday becomes this pivot to the other side. So again, miss opportunity if you didn't grab it, but you can just wait for the short, and I think that'll be a lot better. Been waiting on a short for a while now. It's just trying to sort of find the right point to come in at. 'Cause there haven't been in any sort of decent areas to come into and just say, yep, that's a nail in the coffin, because Spider's been sort of moving erratic to say the least, where it just can't make its mind two ways, uh, or other, because it wants to go down, but it doesn't want to go down. It just wants to stay here for support and just be impartial. What's your level at NT? I want to sweep some trans. I would say you'd not good. I'm not very. I've never really got into the NFT sort of scam business because by then I just could not be asked with all the BS peddled by people. So I was like, yeah, you know what? Just going back to Bitcoin. There's no point trading these scams anymore. So yeah, I would say close enough next to zero. It's not something I use. It's not something I look at. It's not something I care for. And instead of lying to guys saying, yeah, I'm an expert, I'm just gonna tell you guys, nope, it ain't me. Yeah, again, it could be a sort of a double top to that double top. Like, so you got your larger M here. This is just the secondary top to that. Again, we're just looking for the trap of longs, and the have people come in here to then sort of undercut this. But we'll see if we can do that, and I think sort of if Monday can sort of sweep down, Tuesday maybe hold out people a bit higher, because we don't want it to go down on the Monday, Tuesday, because Wednesday doesn't continue. It's not really a continuation day. It's usually a inverse. It goes inverse to what people trade the prior 2 days leading up to it, because it's just because you get the collection of volume being built up. In this instance here, we have a bunch of longs, a bunch of people sort of really nicely in here. But if we start building short, then it just looks like Wednesday will just come in and do that. So we want to come in, then we want to go back, then we want to nail in the coffin on sort of the Tuesday, Wednesday. And the same thing goes with Bitcoin. It's just you want to look for everything, and it's good that the sort of the time that we expect everything to sort of go haywire is in the afternoon. So there's a lot of time before we get that, so we can come in the morning and get enough notice to how people are trading before the 2 o'clock. Because again, they'll just sweep it, then they push, then they have a pushback. Don't really care about news for Bitcoin. And why not? Let's look at this news article. May is kicking off with a deal for the First Republic Bank. Though there's, why am I reading? I'm just gonna get this.
A volatile summer is coming as Fed pause,
There
debt
we go.
tussle meets shelter in these stocks, says strategist. By Barbara Paul-Meyer. May 1st, 2023, 8:39 a.m. Eastern Time. May is kicking off with a deal for First Republic Bank, though there's no real celebrating across Wall Street. That's as investors face a week full of potentially market-moving events, a Fed meeting, jobs data, Apple earnings, and ongoing debt ceiling negotiations. We're also coming off the highest level since February for the S&P 500, which closed out last week at 4,169. And obviously that sell in May and go away mantra is making the rounds, with MarketWatch's Mark Hulbert advising
May
investors
go
stick around, but in safer stock market sectors. On to our call of the day from the team at Evercore.
That is funny. May go away. Yeah, I mean, there's a lot of selling that comes in. Investors stick around, but in safer stock. And you saw that in gold. You can see that everyone just sold and then just bought gold. It's like, yeah, okay, cool. May is not the month. Let's go back.
Core IC, where Senior Managing Director Julian Emanuel says, get ready for a Fed pause after one last 25 basis point hike this week, with a playbook for that as well as the debt ceiling tussle. The Fed pause on May 3rd.
Everyone's betting that the last 25 basis point on that interesting. Wrecked in June, sold too soon. That's so funny. I mean, they're not wrong because I mean, just looking at in the thing, I think we talked about it, like, seasonality of the spy, just coming in here because we had a really great week where it did close as it comes, and May coming up first there, you got that massive sort of in 2 weeks that abysmal where everyone just panic sells. But we have time. As you can see, this is more of a 50 60-40 here. Then we become a 40-60. Then it's a 30-70 split. Then we reset that whole thing again. Then wait for July, which is the quarter change. Then we get a very nice summer. But so again, selling may go away. Again, if they sell off too soon, they get trapped. Maybe we go a bit higher, which is like, oh, I sold, I bought back higher. Now my bid's a lot higher, then I can get everyone out by this point here. Because again, and what is the average? Minus 7. The mean is, yeah, that's insane though. Let's continue.
Whose rumor has been priced by the SPX/VIX collapse, will be sell the news, given inflation remains a problem and the SPX 4,200 ceiling collides with the debt ceiling, said the team at Evercore. A hawkish pause, decelerating economy, and contentious debt ceiling debate drives volatility and results in rotation back to prior defensive leaders, all of which outperformed in April, they said, noting that they like healthcare and staples here. And just as the
Healthcare good? I don't think healthcare's good right now. Check it out. Bring out the big guns. Bring out big guns. Actually, we look at all of these. Why not? Uh, do healthcare. This is tech. Actually, yeah, tech. I think tech looks the weakest right now. Because it had very nice sort of moves where everything was like being stagnant and it was just moving higher. So naturally, but it's coming to a point where you gotta look at it and just say, it needs to sort of push itself back down. Nothing really standoffish. This could be nice. Healthcare, there we go. Yeah, healthcare, I guess it's decent. I mean, it's been a massive sort of decline. Now it sort of stands to reason that again, the whole sort of market relative towards buy has come into here, so it could stand to sort of push it out because it is the weakest coming in here. So maybe we can look at it better here. I just forget what it is. Where is the E? Where is it? I always forget where it is. Dow Jones sectors. No, it's not sectors that one. I forget where it is. I'll find it and remember it last time. But I was looking for where it shows split on.
Fed
Carry
is
on.
pausing. Investors should be doing the same owing to higher risk around the debt ceiling debate that's showing up via ever higher U.S. sovereign CDS prices and a year spread between 1 and 3-month Treasury bills, they say. They aren't, though. Because until equity markets begin to notice, it's unlikely politicians will feel compelled to act. Political brinkmanship will fuel market volatility. The VIX trades to 40 in 2023. SPX retests the 3,800 floor. The similarities to 2011, where arguably Democrats and Republicans were more reasonable than.
No, here, let's look at the VIX. Why not? The VIX is a nice little. Have it here. I should have it somewhere. What do you mean size? Oh, that's weekly. Yeah, we're probably going to expect some volatility just by looking at it. I mean, if you look at one in front, it's a lot higher. That means they're sort of coming in with some expectations of it being volatile. Yeah, it's a lot lower, so we're probably going to expect some volatility, which will probably be manifested in a downward sort of push from the looks of what they're trying to say. And that sort of lines up with everything we already know coming into it, that okay, we're expecting a clear sudden sort of whoosh of liquidity before sort of a very much purging of everyone that went short or long rather in the push up.
In 2023 are striking, says Emmanuel and the team. The big date to watch for equities may be May 2nd, which Evercore points out marked the S&P 500 peak and VIX trough of 2011. Buying healthcare, staples, and portfolio convexity is the
That's
best way to
tomorrow.
handle the summer heat, which, similar to 2011's debt ceiling.
No, why would it be tomorrow? That's the one to watch out for. Tomorrow will just set up for the 3rd of May. So 1 day difference. Oh yeah, it matches the exact similarities. Oh no, man. It's just, maybe it was that was the Wednesday instead of it being, being the 3rd this month this year. So not the 2nd, the 3rd. I mean, we'll see because we'll seconds tomorrow.
Will begin in May. Convexity strategies are designed to profit from increased volatility and involve buying out of the money option calls and puts. Evercore suggests portfolio convexity via calls, right to buy an asset at a set price by a specific date, on the SPDR S&P Biotech ETF, and puts, rights to sell, on Invesco QQQ Trust Series I. He specifically suggests.
He's suggesting biotech. Biotech is something that if you don't know, just don't get into it. Plain and simple. It's one of the things where there's a lot of factors that determine it, and I just always ignore it because I don't understand them because I'm not a chemist, and I've said this before. And you don't have to be a chemist to understand it, but you need some prerequisite knowledge because it is very sort of time intensive because you got to put the research in, you got to put the leg room in to understand if they're going to go good or not. I mean, because you might have a very sudden sort of mass sort of rejection by the FDA. It's like, nope, nope, like you can't make this anymore. You can't make this drug. It failed sort of clinical trial, whatnot. It's failed sort of animal testing, whatever it ends up being. You gotta know beforehand, and that's why you gotta have that research before coming in.
XBI accept 82 calls in QQQ August, 304 puts. For the strategy to be profitable, he says XBI must trade above $87.85, long call strike plus premium paid, versus the current level of $80.20. As XBI falls below the $82 call strike, however, the option becomes out of the money, options without intrinsic value, and the premium paid is at risk. As for those so-called pause rebounders, the Evercore team has screened the Russell 1000 for healthcare, biotech and consumer staple stocks which have lagged behind their sector median performance, but have 2023 earnings per share growth above the sector median. They say those stocks could outperform in the second quarter and beyond, focusing particularly on Seagate Technology and BioMarin Pharmaceutical. Here's their full list.
The open image new link. They keep moving everything, and why am I losing this way then? There we go. Yes, lovely pixel. That's the whole list. Again, if you're going to go in biotech, uh, biotech, uh, put the legwork in. Same thing with healthcare. Put the legwork in individual sort of things. Sure that they are lagging behind. Just because they're lagging behind doesn't mean they'll suddenly rise. Unless some new sort of need for something that they produce is needed, or they randomly have something around the corner they just publish, like, oh yeah, super drug that cures everything or whatnot. But you just got to put the legwork in to see who's close on their next sort of breakthrough, because it's pretty much a lot like crypto, biotech, but with a lot more lot more availability to lose it all. Uh, just because it's so uh it's so feast or famine on if or not the drug is uh is approved or not, or whatever they're working on succeeds the the first whatever stage it's currently on. So say if it's on the first stage of just concept, then second stage of just testing, then gets approved, and the next stage after approval, then yeah, cool, then you're done. Then the stock rests a bit after a massive pump, then you can sort of pick it up, I guess. But then that's the thing with biotech, you can't really just randomly just pick it up on like a nice little low, because you never know if when they're gonna get rejected by the FDA, or when something just horrible happens. So unless you put that legwork in. I think that's it for that news segment. It's nice. I mean, there's a lot more. We can read the buzz. Let's see. What's welcome to May. Uh oh no. Oh no. Everyone's bearish, so I think we have a few sort of points. Just to say that screw everyone out. I mean, you can see there's your welcome to May, where everyone said, "Oh yeah, welcome." He said the same thing last year. I'm joking now, but he says something. But everyone shorts it here. It's like, oh, it's May. Oh, they got liquidated. Then down it goes. Oh, everyone went short. Small tick up, or down it goes further. But yeah, generally, it is the worst of the sort of 2 months. I mean, worst of the 12 months coming in here for the most part. So you gotta keep your wits about you, but it's not a sort of frenzy to say short, short now, short really early, and just call it a day. You gotta find the right entry in it, and I think you have the whole week to decide that, or mainly Wednesday, to decide that, just off the back end of when we're gonna get that interest rate announcement. By making a breakout push here. Bitcoin not really doing much in. Actually, no, it's not even SPY that's doing that. That's where it's closed. Bitcoin not really moving up as fast as intended, so it's a good sign. That means it's just waiting for things to line up in terms of timing wise and market open. But we're just looking for those shorts to get cleared out. Once we can get those shorts out, we can then look for that potential to undercut everyone. And I think that's pretty much all I can really do for today. I mean, there's not really too much to say because again, it is the Monday. It's a nice little open day. There's no point looking at altcoins because they'll probably usher the similar sort of sentiment where we might push up into these points here. Everything's sort of printing off these flags, and we trade these flags basically as inverse of where retail trades them. If they break short here, and you can see every time the flag breaks because it is a quote unquote bear flag, they short it, and that's just free real estate for us to say, okay, that we push up here. But once we get up here, we got to sort of realize, do they reverse it entirely, or is it just for this to say, okay, we got you guys short, we got everyone go break out along here, and now we're gonna continue here. So then, for the sake of argument, if you look at the textbook, they will say, oh, this is a flag that went down. You can see that flag always works. Should be a decent day today. Should not be too hard in terms of just random occurrences. I don't think we get any sort of pushes where it just randomly goes to zero or goes to a million. Uh, but other than that, I think it's gonna be pretty boring. It's mostly gonna be set up because we're coming into a big news day, so it's gonna be, don't mess it up. No London and traders coming in, so probably get them in tomorrow. Asia moves the majority of the bulk. I don't. So again, we had a decent amount of time to consolidate. So this essentially being our consolidation range here. So we gotta look for it to break, and we treat the first break as false because we know that we have liquidity. If it does break high, then retests and holds the middle of here, that's probably going to be something you'd see as bullish, regardless of what ends up coming, because by then this will sort of probably stack heavy short as people clamor to short this. So you want to look for very fast movements away as a sort of basis to say, yep, it's short. That's something I want to trade, and so on. I think we'll end it here, because otherwise I'll run your guys' heads round in circles. Though I've already done that a decent amount, I guess. Have a lovely day, guys. I will catch you guys tomorrow. Trade safe.